Hello and welcome to the Market Outlook. Today on the 24th of January 2021, it's currently 9:45 UK time, 9:45 p.m. UK time, and welcome to the Market Outlook. Today I'm going to be discussing a wide range of different currency pairs that I'm looking at for the week ahead. Discussing previous positions that we were in, some very favorable than others. Some limits that didn't get hit, but others that hit to the T, and reacting quite nicely, and some that I'm looking to swing. Several intraday positions I'm looking at, and then understanding the macro sort of target for that specific currency pair, etc. So just giving an overview viewpoint on the currency pairs that I'm looking at for the week ahead, and into the further months, etc. So without further ado, let's get into this market outlook. Firstly, looking at the dollar index. Just looking at the dollar index on a daily time frame. I've had this Fibonacci level for the past 3 weeks, I believe, and I've just been awaiting for deeper premium pricing, and we've reached an ultimate. You can call this the near 92%, 95% premium pricing end. So we reached an extremely premium price, and now we're ultimately looking like we are going to sell off. And the reason I'm favoring shorts instead of longs is firstly that confluence, and secondly it's these equal highs as well. Notice how we did have a very small body closure upon raiding these equal highs here. Notice how this candle couldn't close above these relative equal highs here. So it suggests that this was more so a raid. If I just remove the annotations, this candle here is more so a raid of these equal highs than an actual break in market structure. So in saying that, I am favoring lower prices on the dollar. Just scaling into a 4-hour time frame to get a more accurate representation on where I'm favoring the dollar to go next week. Just remove the daily annotations. We had the raid of those equal highs, mitigation with that sponsor candle. I believe that was present on the 15 or 5 minute time frame. Been saying that we have got these relative engineered swing lows, so I would like to see these lows get liquidated. Upon these lows getting liquidated, there is a sponsor candle, the last down candle before that up move, that ideally took out all of this sell side liquidity. So I'd like to see a mitigation of that candle and see some sort of correction / reaction of that candle. Maybe create a new lower high in order to create that initial lower low, and take out this prior swing low here. So that's a favorable bias for myself. I am favoring shorts on the dollar. Looking at this sort of Fibonacci sequence that we have on the 4-hour time frame. Again, from this high here to this low, we currently are in a discount price range. I would favor for price on the dollar index to reach a premium pricing, and then ultimately sell off to create that new initial lower low. But yeah, just looking at the overall sentiment on dollar, notice how every time we've created that swing high, we've had that sell off, created that swing high, we've had that sell off, created that swing high, wicked, mitigated, rebalanced with that prior gap upon market open, and then sold off. And we're seeing that same thing present here, a mitigation with that previous manipulation, and ideally took out these relative equal highs here. And upon having that mitigation, we've ultimately had that first leg to the downside. Now it's a matter of, do we form that new lower high in order to form that new lower low? Looking at structure on the hourly time frame, what we can see present is this is the lower low, this is the lower high, and this is the lower low. So as long as this lower high over here stays intact, we are continuously in a downtrend. So I'm favoring shorts on the dollar. Overall, I want to see a new lower low. Scaling into Euro USD, a trade we were looking at last week, but unfortunately our limit did not hit. I believe it was quite far, but nevertheless it was the correct bias, and in addition to that, we did save ourselves from taking a loss, and I'll explain that in a minute. So my initial bias, I believe it was long around here. We did have a limit set here, but unfortunately that limit did not activate, and this should be changed to broken market structure. So upon that limit not activating, we did have that impulsive move up that broke market structure, and this basically, from my point of view, changed my bias in the sense that I wanted to be in a bullish trade in order for me to take a hedge sell trade. So I believe I did have a position over here illustrating a possible short position on Euro USD, but in order for that short position to be valid, I would like to see a long present first. And upon us not getting activated in a long, I told everyone to remove that sell limit. And it was because of how sort of impulsive that breaking market structure was. Just look at these candles here, very broad, big Marubozu bullish candles. So we have 1, 2, 3, arguably 4 consecutive candles. And what you've got it sort of in counter is this candle once looked like this, right? It did have a full body to it, but in saying that, we've closed over here. So in saying that, there was a lot of bullish pressure, so it was best to take a buy trade and then look to hedge your position on a sell trade to be on the safe side. But in saying that, my bullish standpoint still remains the same. If we look at overall structure from a 4-hour time frame, I'd like to see price come into this sort of region here, this premium pricing, as we still are in a discount. So I do believe there is a lot more upside towards Euro USD. In addition to that, we are coming into contact with these sponsor candles, the last up candle before that down move, the last up candle before that down move, and the last up candle before that down move. So these are all areas of interest. I can't put a specific limit on one, as none of them have been mitigated yet. So those are all something I'm looking out for. But in order for me to take those valid sell trades, which could ideally give us, countless amount of pips, considering now, yes, this was a raid, as mentioned in the previous market outlook, that we ideally saw higher prices with. But now they're looked at as relative equal lows, in my opinion, as this prior engineered swing low here has no additional use now, as I wouldn't consider this as a sponsor candle to react off to a certain extent, as we've sort of already had that mitigation with that wick there that took out this prior sell side liquidity with that low there. So I'm favoring higher prices on the dollar. Upon reaching our areas of interest, I will monitor how price reacts and take the trade accordingly. But yeah, I would like to see it reach a premium pricing. We could even sort of come to this level here. But my main area of interest for the longs is this last down candle before that up move. Yes, we did have a small retracement, but in that small retracement, we've created these relative equal lows. So I do feel liquidation of those lows would occur. We could possibly look to go long at that last down candle before the up move. Yeah, that's Euro USD. Moving on to GBP USD. This is a very favorable opportunity I have, and this could ideally give us over 100% return just on this currency pair in itself. But just scaling in from the daily time frame down. So yeah, just looking at sort of daily momentum right now. Yes, we can see very clearly we are in a bullish trend, as we are making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, high highs, higher lows, and arguably just made that new higher high. So I do expect a higher low to be formed. And realistically, where if you look at sort of daily momentum right now, notice how, yes, we did get a raid here, but it's more so a mitigation and a reaction, a mitigation and a reaction. We see that last down candle before that up move, a mitigation and a reaction, a mitigation from this last down candle before that up move, and a reaction, and we've seen that mitigation there and a reaction. So I do think this level is valid now, and yeah, I'll look to scale in from that candle onwards. So now moving on to the 4-hour time frame. Getting an overview on the 4-hour structure. So again, we are in a we are in an uptrend, higher high, higher low, higher high, higher low, higher high. Arguably just made that higher low as we did not take out this prior swing low here, so the uptrend is still valid. In addition to that, we created these relative equal highs here slash triple top. Had that sell off ideally to this sponsor candle here and saw that bullish reaction that liquidated these relative equal highs and created that new higher high. So yeah, there is 3 strong possible trades that we can look to take on GBP USD. Again, this is the 4-hour time frame, and there's one favoring more than the other two, and I'll explain that in just a second. But now, sort of turning on the hourly time frame objective tree and just understanding where we are in the markets and what I am awaiting for. So again, using the Fibonacci, understanding that you know, in order for me to look for longs, I would like to see price come into this discount range. I would like to see, you know, banks are like any other sort of person in the world. You know, if there's an iPhone that's selling retail for 1,500, but it's at a discount on a you know, let's say a mobile site or something, and they're selling for 1,100, the average consumer would go to that discounted price, the person who's selling it at a discounted rate. That's the same what the banks are doing. They're looking for the best possible price to buy this currency pair and put the most amount of orders in. Why would they buy a large amount of GBP USD within this range here? So yeah, that brings my bias. The only reason the algorithm would look to impulsively move in a bullish direction at this level here is to mitigate with a prior sponsor candle or prior institutional candle, or take out relative equal highs in order to use as liquidity for the later push down. So yeah, from the bank's algorithm point of view, we want to look to buy over here in order to maintain a very profitable standpoint, both from intraday and swing perspective on GBP USD. But I'm scaling into my corrective biases right now. Firstly, just getting into the 15-minute time frame, we have broken market structure upon, I believe it was Friday. Yeah, so on Friday we did break market structure. I didn't have that much momentum, but nevertheless we have broken market structure. In breaking market structure, we did leave this last down candle before that up move, and that comes into this area of interest present on the 30-minute time frame. So yeah, that was a 30-minute time frame. This sort of doji candle I'm looking at, but then I refined it to the 5-minute time frame. And the reason I'm using that candle specifically is because, as you can see with this other prior sort of price action, yes, we've had a raid of that low and that move up that broke the market structure here. We've had a mitigation of that candle. With this candle here, yes, we've had a wick in it, but we haven't got that official mitigation that I'm looking for, and that's at the mean threshold. So that's something I've got my eyes on. In addition to that, we've had this last down candle before that I'll move, and we've had that mitigation towards a mean threshold. Again, the last down candle before that I'll move, and we had that mitigation towards a mean threshold. So that's something I'm favoring here. I would like to see this happen tomorrow in the London session. So I'll be alerting the group upon us finding a favorable opportunity there. Upon us reaching this level and our limit activating, I will be targeting this sort of region here, and the reason is because if I scale into the hourly time frame, this was the last sort of up candle here. Before that down move, so I do feel this up candle here contains a lot of buy orders that need to be mitigated with. In addition to that, I just refined it to the 30-minute time frame. I believe it was 15-minute. So yeah, this last up candle before that down move, just zoom in there so you can see a bit more clearly. So yeah, this last up candle before that down move, and that's something I'm awaiting to get mitigated. And again, refining my entry to the T. So upon this limit getting activated, and if we do reach our initial target, I'll look to hedge my position. Hedge my position where? To our initial and main entry, which is the longs, and I'll look to swing, not swing, sorry, intra. This will be an intra week position where I'm holding it for the majority of the week. Hopefully this comes along maybe Tuesday or even Wednesday, as most GBP pairs, you know, can move 150 to 200 pips in a day. So yeah, if we await that sort of volatility and wait for the markets to show its hand, then react accordingly, we can get much favorable results. But nevertheless, there is the last down candle before that up move, creating a sponsor candle, and I'm targeting the mean threshold of that candle. So again, that is that's a 1 to 32 in itself. That's a 1 to 37. And that's a 1 to 36. So all in all, looking at about 1 to 120 RR, arguably. So even more, 1 to 136, I believe. But nevertheless, this is a favorable opportunity I'm looking at on GBP USD. Moving on to GBP JPY, a phenomenal trade we caught last week. Just getting into the different time frames. So again, looking at the daily time frame, understanding overall structure. Yes, we did have that major sell-off, but notice how we're correctively moving back towards that level there, making higher highs, higher lows, higher highs, higher lows, higher highs. And where are we arguably moving correctively to? If you watch the last weekly outlook, I did talk about this last up candle before that very bearish impulsive move in detail. Just putting on the weekly time frame. So again, that's our weekly area of interest / weekly sponsor candle, last up candle before that down move, and then we just look to refine this on a daily time frame. So scaling into the daily time frame, we can see, you know, price tells a bit more of a story in the sense we've liquidated this prior engineered high. Upon liquidating that high, we've seen that sell off. So that candle there is an area of interest of mine, and ideally a valid sponsor candle. So I'm still projecting higher prices on GBP JPY. It's getting to the 4-hour time frame. Again, looking at structure again on the 4-hour time frame, we are in a bullish trend. Higher high, higher low, higher high, higher low, higher high, arguably a new higher low. Sort of made a higher high, higher low, higher high, higher low, and it looks like we've just made that new higher higher there. So something I'm looking out for is possible longs present. Possible longs present, and specifically where. Well, I've got two different areas of interest. So if I just scale into the hourly time frame and just show you what I'm looking at, I'm ideally looking for a sell-off within this region here. And if I show you on the 5-minute time frame, just scaling into this region here, we do have a 5-minute SC there, the last up candle before that down move. We didn't get a clear mitigation of it. We got a rebalance of this inefficient pricing here / imbalanced pricing, but there was no clear rebalance of that sponsor candle there. So what I'd be waiting for is a raid of these relative equal highs here upon market open, or maybe even Monday's London session, or even coming into Monday's Asian session, as this is a Japanese yen based pair as well. So we have to factor that in, considering, you know, it involves the Japanese yen, and the Japanese yen, the majority of the moves move during Asia, so we have to consider that. But I'm waiting for a raid of these relative equal highs here, and then look to short. I don't want to go too ham on GBP trades, as yes, we are looking to go long on GU, but let's say that messes up to a certain extent. You know, we haven't took risk multiplied by 2 on 2 GBP pairs, if that makes sense. So I'd be ideally favoring the more favorable setups, and that would be sort of at the mean threshold of that sponsor candle there, and stops just above there. So it is a bit of a big stop in the sense that, you know, 5.7, but Nevertheless, this isn't the main move we want to catch. The main move we want to catch is the long, and still with this move here, it would give us a very, very favorable RR. Bringing it to a 1 to 30. So yeah, I'll be waiting for a raid of those relative equal highs there. Upon that raid, hopefully have some distribution schematic form, a sell off to this last up candle before that. Sorry, the last down candle before that move present here, the last down candle before that move. We haven't seen a clear mitigation of that candle as such yet. In addition to that, we do have this last down candle before the up move, and very impulsive up move. Notice how these sort of candles quite doji like, but notice how we had 1, 2, 3 very bullish impulsive Marubozu candles. So upon sweeping those engineered lows here, engineered swing lows, we could actually get a mitigation of this candle and react accordingly there. So it's about monitoring price at that specific limit and that specific session and reacting accordingly. But yeah, that's GBP JPY. Ideally favoring a push up into this 5-minute sponsor candle there, a sell off into this area here, and then look for higher prices and target that weekly sponsor candle. That in itself is a 1 to 42. Scaling to AUD USD. This was a trade I actually broke down with one of the members in the Discord on a Zoom call earlier today. But just looking at overall structure, understanding that, you know, right now on AUD USD there is heavily bullish momentum. The reason I say that is, you know, it's getting into a 4-hour time frame. We are correctively making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Arguably that new higher low, right? Ever since we formed that sort of corrective higher low, and we haven't really took out this low here, we've been in a contraction range, meaning prices just move sideways. Nevertheless though, I did call this sort of bullish move here, as I do believe I had the limit present here somewhere. Okay, maybe it's not here anymore, but I did call a move here. I believe it either missed our limit or we did get stopped out by the pip, and we've seen that bullish correction up. But what I was favoring was a bullish trend. Now, from AUD USD's perspective, yes, that means I'm trading with the trend. But if you look at the overall structure in this contraction range, we are making lower lows, lower highs, lower lows, lower highs, and ultimately look to form a new lower low where to this last down candle before that bullish impulsive move. So I'm awaiting a new lower low to be formed, and I look to get involved, you know, with that new lower low being formed, the ultimate sell-off. In that ultimate sell-off, I look to hedge my position with overall market structure, and to initially see if we can get a interlink bias with the weekly sort of time frame. If you're a swing trader or you work during the day, etc., this could be a very nice swing opportunity, as if I scale into the weekly time frame, what I'd be targeting is this candle here. And the reason I'd be targeting that candle there and not necessarily this candle is, if you look at price momentum now, if I remove these annotations, we have in fact, you know, just by a couple pips invalidated that sponsor candle. So this prior price action here has all been mitigated with the next area of interest for me is this last up candle before that down move, as there was no prior mitigation from the right hand side on this candle. In saying that, there are relative equal highs present here, so if we can get into a favorable bullish opportunity on AUD USD, I believe it can pay us very well, as if we sweep those relative equal highs, the next area of interest is you know, this gap here. this imbalanced price range and inefficient price range, and ideally targeting this sponsor candle here. So that would be my next area of interest for a major swing on AUDUSD. So again, that in itself, if it comes to play, is a 1 to 146, nearly 47. So yes, that's something I'm favoring on AUDUSD. Overall long, but short term short, as we are right now in a contraction phase. So I look to play along with the smaller time frame trend, the way a pullback where to this 15-minute sponsor candle. So this was the last up candle before that very bearish impulsive move. In addition to that, we've got inefficient pricing there. And yeah, why don't I use this candle here? Because ideally this was the last up candle before that down move. So again, just looking to refine my position as much as possible. And yeah, something I'm favoring in the week ahead. USD JPY, a limit I called last week. I didn't personally take part in this limit as I wasn't really concentrating on this pair to a certain extent. But in saying that, it looks like it is coming to fruition quite nice. I am favouring longs though, so upon that retracement, we had that sponsor candle there, the last up candle before that down move that took out this sell side liquidity here, or even illustrated as a trendline phantom, right? Retail traders looking at this from a trendline point of view, hit once, hit twice, hit a third time, they think, you know, it's gonna shoot for the moon or something, and we see this very bearish impulsive move. Where did this whole bearish impulsive move come from? Ideally, this candle here, this wick mitigated with that candle there. So this was the next wick, sorry, the next candle that needed to be mitigated with. We've had that wick that now, sorry, on Friday that mitigated that candle. And it looks like now we are going to see lower prices on USD JPY. Would I recommend you selling now? No, I never really take trades upon market open, as I feel it's just too risky. But in saying that, we do have these relative equal highs here, so a possible re-entry could be at this level here, within that candle there. A raid of those relative equal highs, a mitigation of that candle, and we could see lower prices on USD JPY. So that's another thing on my watch list, just getting into the 30-minute time frame to give me an overall RR standpoint with this. So I would take it at the open of that candle. Just put stops above maybe the high there, 2.6 pip stop, just to be safe from spreads, etc. As normally at this time upon market open, spreads is quite crazy at this sort of 10-11 p.m. time, UK time. Spreads are normally quite big, but that in itself is a 1 to 30 if it comes to our area of interest from a bullish standpoint. And whereas our area of interest from a bullish standpoint, just scaling into the 4-hour time frame, we can see this was the last down candle before the up move, and that would be my first area of interest. And my second area of interest is this institutional candle, the last up candle before that down move that took out this prior sell side liquidity. The reason I didn't use this whole down candle is because, you know, that in itself is a 33 pip candle, so that's not something I look to get involved in and have, you know, a 15-20 pip stop. This is a 4.4 pip stop for a possible 259 pip take profit, so that's much more favorable in my eyes. So yeah, that's something I'm favoring on USD JPY, and USD JPY is one of the currency pairs that move in sync with the dollar. So notice the pattern we had on the dollar, where we had a sort of sponsor candle, and then we had that sell off, we had that sponsor candle, we had that sell off, we had that sponsor candle, and now we're ultimately seeing that sell off. We can see that same thing present on USD JPY, as we've had that mitigation, now ultimately have that sell-off towards our area of interest. The same thing we're expecting on the dollar, towards a sell-off towards our area of interest, then see higher prices on the dollar, see higher prices on USD JPY. Looking at Euro JPY, let's start on the weekly for this one. Just scaling into the weekly time frame, understanding sort of where price is currently. Yes, we were in a downtrend, very bearish downtrend, but just scaling in from price from, you know, sort of this time last year, 21st of Jan last year. We did make that lower low, lower high, lower low, lower high, lower low, arguably that new lower high, and create that new lower low, which was a raid in price, and then ultimately we broke market structure. And then had that small retracement back to an institutional candle, then create that new higher high, higher low, and it looks like we've just created that new higher high to the pip. If I just zoom into this price action here, so yeah, just to the pip we've created that new higher high, and ultimately now it looks like price is retracing, but I would favor a clean break of this engineered swing high. And the reason I say that is because if we look at price action to the left, we have created this engineered high here, this double top formation. So is it a matter of having a small retracement towards a discount price range into the sponsor candle here, to create substructure higher low, and then create a very impulsive higher high. But upon sweeping this relative equal highs here slash double top, we are going to see some impulsive price action. So this is something I'm looking at deeply on Euro JPY in the up and coming weeks slash months if that occurs. Scaling into the daily time frame, just removing the weekly annotations. Looking at sort of this range here, we are in a distribution schematic, but in saying that, just simplifying it a bit more, we are in a contraction phase here, relative equal highs. We have that sweep of those highs, have that small sell off to mitigate with something over here on a smaller time frame. Ultimately, after mitigating with that, we have that push up to raid that prior high over there. So upon raiding relative equal highs and having that sell off in the mitigation, etc., there is no use of this high here, so it just becomes an engineered swing high that needs to be raided. Upon raiding that, again, same thing here, we have that small sell off mitigated ideally with that daily sponsor candle there. But if we actually look to refine this on a smaller time frame, we could probably find a small sponsor candle, etc., and then ultimately having that push up once again to raid that high. And then we've seen that ultimate sell-off that's broken market structure now and come into our daily area of interest. Now this is something I want to get involved in, but one thing I'm sort of cautious of is this daily gap in price. Now this is not an imbalance or inefficient pricing, it's an actual gap in price that needs to be rebalanced with. In addition to that, if I put on the sort of fib from the high to the low, we are not yet in a discount price range. So yeah, longs do look favorable on the card. Just getting into the 4-hour time frame and removing the daily annotations for now. So yeah, just two things I want to sort of talk about. I believe we missed our limit on USD JPY by a pip. Now this is very painful to witness, especially when sort of something like this happens. So we had relative equal lows here, we had that raid of those lows, but what I was favoring was a mitigation of this candle here. No, I believe it was this candle here. So I was awaiting a mitigation of that candle there, and unfortunately price didn't give it to us. It mitigated this candle here. So this was the last down candle before that move. We saw a very clear mitigation of that candle there. But yeah, from that low to our entry was 2.1 pips. So yeah, that's very painful. We didn't get tagged into that. But this is what I mean by refining on a smaller time frame. If I just sort of remove these annotations for a second and just look. So our limit was present over here. We saw that break in market structure. Again, we could have refined our entry within this sort of area here. So getting into the 5-minute time frame. So again, we've seen that break in market structure. We've seen that retracement come to a sponsor candle. Again, this is a sort of prior sort of low, low, lower high, lower, low, lower high. It can still be considered as a small lower low. So I mean lower high in order to create that new lower low. So arguably this is a micro break in market structure. Have that small pullback to mitigate with that candle. Again, another push up. So this is where we could be looking for longs upon this candle here. And upon reaching that level, stops will go just about below this level here. We don't need to go below this candle here, as we know this candle's already been mitigated with. Upon us reaching this level here, we've seen that bullish reaction up, small pullback. Again, what's it doing? Mitigating with a previous sponsor candle, and we've seen higher prices ever since. So yeah, it has moved quite impulsively. What I'll do is I'll create a whole Discord channel or separate tab in the Discord just based on entries. So the different entries we sort of look for on a smaller time frame. So if things like this occur, you know, you're able to sort of not chase after the trade. We never chase after the trade due to FOMO, but you're able to capitalize on the trade with entry refinements and the specific entry refinements in that specific situation. So I will create tabs in the Discord for that. But in saying that, yeah, I wouldn't really look to sell just yet, and the reason I'm sort of hesitant to sell is because of this area of interest. So we see this sort of structure here. It looks very similar to GBP JPY on the weekly time frame. So if I just get into the 30-minute time frame, so we get a bit more of a refined look on what's going on, and understand what story price is trying to tell us. So we had this contraction range here. We had that manipulation that took out this prior engineered swing high. In addition to that, these relative equal highs here. Upon sweeping those relative equal highs, we had this last up candle before that very bearish impulsive down move. And we've had no mitigation upon the right hand side of the chart after that. So yeah, I think this is just a sort of this is more a reaction from the bank's algorithm in order for retail to short upon market open. So upon that, you know, they're looking to accumulate a lot of price come market open, you know, get a lot of people involved, and they ideally want a lot of stops present above this high here. A lot of stops present above this high means a lot of liquidity for themselves, or from the bank's algorithm point of view. Upon sweeping that liquidity and mitigated with that candle, they're in no loss from that trade. So they're using retail liquidity in their favor to short Euro JPY to lower prices. Lower prices to where? To this sponsor candle here, the last down candle before the up move, and I'm taking my entry on the mean threshold of that candle. Ideally, where am I targeting? Just getting back onto the weekly time frame. Targeting ideally that new higher high to be formed, and a sweep of that prior engineered high there. So yeah, that's my overall sort of target on Euro JPY. Looks like it's in line with a sponsor candle over here. So yeah, that'd be good to see. But most of all, what I'm favoring is this raid of this weekly double top, what it looks like. NZD USD, again another favorable trade that we were in. I believe this was 2 weeks ago, so we got tagged into the pip, and it's currently running 1-16 RR. So ensure you take partials if you haven't, but I do expect a overall 1-26 RR. Just getting into the 4-hour time frame. understanding sort of what price has done. So again, we are in a bullish momentum. We are creating higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. But if you look at sort of the most recent price action, what we have present here is these engineered lows here. We see that small retracement up, again engineered prior lows here, prior highs here, but then ultimately take out sell side liquidity. Look how we take out these lows. We take it out very impulsively. This is something I want to see. This price action is what I want to see on a larger time frame on Euro JPY, as we have relative equal highs on a weekly time frame. And if we can capitalize on that, on a rate of those weekly highs from a lower time frame perspective, we can not only capitalize on a huge amount of pips, but a very, very favorable RR in a short amount of time. So yeah, that's something I'm watching out for. If you actually look at this sort of structure here, it's a much more smaller representation of this sort of structure here. So again, we have relative equal lows here. We do have this imbalanced pricing over here, which I am overall targeting for shorts. Been saying that. Scaling to the 1 hour time frame, we do have this last down candle before that up move that ideally created imbalance as well, and this bullish Marubozu candle. So just looking at this imbalance here. So yeah, there is a small amount of imbalance there that needs to be rebalanced with. Been saying that I'm taking my entry on the mean threshold of that candle, near the open of that candle, and the body on the hourly time frame. So I'd be waiting price to reach this sort of area, set a limit, and see how price reacts accordingly. Again, we have relative equal highs here, relative equal highs that we're targeting. But yeah, price could react upon this level here, but I'm just not sort of favoring that price action. And the reason I say that is because if we look at this structure here, we've had 1, 2, 3, 4 drives to the high and then an ultimate sell-off. So we can see just in this range here, yes, it's a contraction range, but we've seen a lot of accumulative build up towards retail orders. So we've seen a stop hunt here, stop hunt here, stop hunt here, stop hunt here. So ultimately creating a distribution schematic in itself. So upon that sell-off, we've had that very bullish loss up move before the down candle. So I do expect that price range to be mitigated with, and upon a mitigation, I do expect a major sell-off. Again, having a 7.2 pip stop loss for the ultimate sell-off, giving us an initial target of 331 pips, totaling, just to make it more satisfying, targeting an overall targeting an overall at 1 to 46. Sorry, so I think the limit was just a little bit above our target, and it was 1 to 45.99. So just rounded up a bit, 1 to 46.11 RR, possibly with encountering this 40, 50, 60. You're looking at, possibly a 1 to 65, if not 1 to 70 RR. And yeah, couple favorable trades. And if you're still holding this one, that's 1 to 30. So it's very, again, this in itself, 20, 60, 66, 66, 90. Again, this is over 1 to 100, just on one currency pair. So this is what I mean by refining, understanding where price looks to go next, and capitalizing on that exact opportunity. So looking for to take the buy, and then ultimately hedge my position for the shorts. And last but not least, Euro GBP. This was a very painful one. Again, very similar situation with Euro JPY. So I believe with Euro JPY, our limit didn't hit. With Euro GBP, we just got stopped out by the pip, and this was the exact setup I sent in the group. I believe it was on a 5-minute time frame I sent it out. But we see that initial downtrend, and downtrend, what was the purpose of the downtrend? To sweep this prior engineered low. Upon sweeping that prior engineered low, We had that lower low, lower high, lower low, creating that new higher high, higher low, breaking market structure, higher high, higher low, higher high, higher low, created that sort of small retracement. Initially, I did think this was going to sort of go long. Had that pullback to take out that relative equal low, and I believe it was going to mitigate with the mean threshold of that candle there, and ideally had that push up and then flew ever since. So literally, we got stopped out by literally a pip, right? So when situations like that occur, it is painful, but yeah, price did fly ever since. We did get free drives to the low, sort of creating this reaccumulation schematic in a way. How we could have capitalized on this from a 5-minute sort of structure here. If we actually look at this sort of price range here, just from educational point of view, we've had that impulsive move. We understand that price has broken structure very impulsively now, bullishly. We scale onto the 1-minute time frame and just sort of let price tell the story. So we see the same thing present here that we saw on the 5-minute time frame. We see a raid of those lows here. We see a break in market structure. Again, we see relative equal lows here. In addition to that, we have this sort of sponsor candle here. In addition to that, we have that institutional candle there. So could have used this one here. Or, you know, if you're sort of safer, we could have used this one here. So there's the two areas of interest. Didn't come to our first one, came to our second one upon raiding those lows. Again, we've had that next impulsive move up. Arguably broken market structure once more. Just seeing how price plays out. Broken these prior two swing highs. So the next area of interest would be this sort of candles here. Look to go long from. So yeah, it looks like we've broken market structure once more. Come to this sponsor candle here. Again, we've created relative equal highs present here. Looks like a mitigation of this candle has occurred. So yeah, upon a mitigation, I believe there was some prior manipulation, maybe even the second time frames, sweep of that low, hence we got a mitigation there, and then price is flying ever since. So it was one of them. Quite hard to illustrate where the next move was on a smaller time frame, but nevertheless, from a limit point of view, we were quite close in securing that move there. But in saying that, I do look to get re-entries on this, arguably scaling in at a much better risk to reward. This is 1 to 53. We were originally targeting a 1 to 25, but 1 to 53. And what I favor is a sweep of these relative equal highs here, rebalance with this inefficient pricing, just more present, more well presented on a 4-hour time frame, a sweep of those relative equal highs. I want to see a rebalance of this inefficient pricing, and on the hourly time frame, I would like to see price come to this last up candle before that very bearish impulsive move. Ideally, it's got a price swing high to it, price swing high, price swing high, no mitigation of that candle. But this prior price action rebalanced this whole inefficient pricing. So this does look like a good area of interest to possibly take a head short from it. Again, that's talking in the next couple of weeks, or even the next month or so. So yeah, that's something I'm looking at in Euro GBP. It looks like a profitable week. Any trades I do take, I will alert the group in the Pacific session or in the trade idea section of the Discord. Thank you once again for watching this video. Any questions, please feel free to message me. We can go over certain things you're unsure of, etc. But apart from that, I'm wishing you all a profitable week, and let's smash another trading week. Thank you and have a good night.